Pershing Square Holdings manager Bill Ackman is with me today to talk about what investors might see over the coming months. I've certainly seen a lot of industries seen a recovery in sales, particularly as the COVID vaccine was rolled out. But it does seem like there's quite a few companies are finding it hard to sustain that sort of sales growth momentum now. I was just wondering, given that you've got this reputation as an activist investor, do you think now is quite a good time to go and invest in a company that might have stalled? Be quite a good time to sort of push for changes or different management. I'm just wondering if you had a fresh target in mind at all.
So our strong preference is to find a business that's already doing the right thing with a management team we like at a price we like. And we've been able to find that in the last several years. Starbucks, prime example, Agilent. But even with well-run great companies, we can be helpful. And we are always looking for the next big idea. We don't disclose it until we obviously identify it. But I do think we don't need an asset target-rich environment to do well. We're going to make one or two new investments a year. That's kind of been the history of the firm. And we think we can find one of those in pretty much any market environment. One investment this year so far is Domino's Pizza. The other thing we did this year was this interest rate hedge, which it's up about fourfold since we made the investment. And we're always working on new ideas, and I look forward to telling you about one after we're in a position to do so. But the sales stalling wouldn't be a reason for us to buy a stake in a company. What motivated us to buy a stake in a company is if we thought it was a really great business and it was undervalued, and if we thought the reason for undervaluation was fixable, whether we fixed it or the current management team fixed it. But our strong preference is just to work with the existing team.
Okay, so obviously there's lots of pressures on companies at the moment: inflation, higher energy prices. It does look like it's, markets are doing well at the moment, but there's lots of pressures in the background. Where do you see markets going into 2022? Do you think we could see a correct market correction, or actually there's not reason no reason to get to sort of panic at the moment?
Yeah, so I would say predicting short-term stock market movements is pretty much a fool's game, and it's not something we do. All of that said, it's an uncertain world. Is it a more uncertain world today than it was a year ago or 5 years ago? Maybe, probably, who knows? But that's why the emphasis of our strategy is owning these, what I call super durable, undisruptible companies, right? People are going to be ordering pizza and having it delivered, and they're going to eat it. And if for $8, you can feed a family of four with a pizza pie, that's a pretty good proposition. And you get it delivered in 28 minutes by a smiling person. It comes in a box and keeps it warm. That's going to continue. Chipotle is, building a couple hundred, 200 plus stores a year, and they are earning extraordinary returns when they open those stores, and they provide a great product that the customer loves. Lowe's is the number two to Home Depot in the home improvement space. But Marvin Ellison, new CEO over the last several years, has come in and done a fantastic job. And there's no reason why that business shouldn't be neck and neck with Home Depot. And he's made enormous progress taking market share, et cetera. We think that continues. We think, Hilton. Hilton's stock was down the most, I think, of anything we owned when the pandemic was announced. We meaningfully increased our position in the company in the mid 50s. Stock today is 140. They've figured out how to run hotels more cost efficiently. And Hilton itself doesn't own any meaningful number of hotels. The capital and the hotels are owned and put up by others. And Hilton owns a brand royalty on those companies. So when you own businesses that have very, very attractive economic characteristics, and they're largely not immune on a day-to-day basis, but they're protected from interest rates moving up or down, or commodity prices moving up or down. I think that maybe the single most important characteristic today is going to be pricing power. If the cost of your inputs go up, you better be able to raise price and not lose the customer. And that is true for every one of our companies.
Well, Bill Ackman from Pershing Square Holdings, thank you very much for joining me.
Appreciate the time. Thank you.